But one farmer says, seems to me there was a tea party in Boston that was illegal too.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold.
We shall seek to establish and maintain a dollar which will not change its purchasing and debt-paying power during the succeeding generation.
As anguished shrieks rose up from the floor of the New York Stock Exchange.
Government credit and government currency are really one and the same thing. A reserve of gold and a small reserve of silver.
Why do central banks hold it?
Well, it's a form of reserves.
So why don't they hold diamonds?
Well, it's tradition, long-term tradition.
Some people still think it's money.
Hey, good morning. Welcome back to the Junius Maltby channel for another boring and slow news day here on the most boring channel on YouTube. You can see there was a little bit of a change there in the introduction. As per so many requests from you, the viewers, to return the bagpipes to the intro, we went with that. So I hope you enjoyed them. There you go. I listened to your requests, and you've got your bagpipes again. They're good. It's it's our war marching music as we battle for sound money. Let's take a look at this Dow gold ratio. It's been on my mind with the talk of the Dow reaching these new all-time highs, this 52-week high, this Dow breaching 29,000 for the first time as investors shake off weak December jobs report. There's not going to be a whole lot of stories today because I really want to just kind of zero in and discuss this for a moment because I was talking to a friend of mine, a coworker, yesterday, and we were talking about the Fed and their activity, and we're going to get into that in this video as well because you've seen some behavior lately. With the Fed, we've seen discussion of negative interest rates as they promote that, the president himself talking about that, a lot of articles talking about that. But then this whole repo market, the Fed just dumping money to keep liquidity up and just basically issuing free money. And I think that's why the Dow is doing what it's doing. It's pretty obvious if you think about it. There's a lot of free money hitting the markets coming out of the Fed. And these banks, these financial institutions, all of these investors are, they're the closest ones to the tap, if you will. So when that spigot turns on and the free money starts to pour out of the Fed, these guys are there filling up their buckets first. And they're able to use that money to then invest and do things and reap profits with essentially no risk on their end. But we've got the Dow 29,000. And when I saw that this morning, I thought, I wonder what the Dow gold ratio is today. And not a lot of people think of that too often. It's one of those things, and that's how many shares of the Dow can 1 ounce of gold purchase. It's really easy to figure out. So let's take a Dow at 29,000. We divide it by the current price of gold, and what do we get? So we take this morning's Dow all-time high of 29,000. Let's divide it by $1,555.50. Gold being up $1.20 this morning, and we get 18.64. So it takes around 18.64 ounces of gold to buy 1 share of the Dow today. Now, the Dow gold ratio is something that investors have talked about over the last century or so, and some use it as a measure, a way to decide when they're investing in one or the other. When the ratio is very high in favor of the Dow, for example, now they will sell their shares of the Dow and then reinvest and purchase in gold. And then when it flips again, because it's kind of cyclical according to these people, and I'm not subscribing to it 100% or telling you that it's something I do or that I believe in at all. I'm just using this as information so we can kind of look at it and discuss it this morning. So for those individuals who do use it, when the value of gold rises as such to where the ratio narrows again and it takes less gold to purchase the Dow, then they jump back in on the Dow and they kind of ride those waves. I don't know how they do it unless these guys live like to be 150 years old, because it's a pretty broad time frame. Let's take a look at some historic Dow gold ratio charts before we move in on our discussion and look at other topics. All right, so today we're sitting at 18.64 ounces of gold to purchase the Dow. This is a historic chart. It's very difficult to find updated historic charts, a lot of them end or conclude in like 2008 or 2009. It's as if the last decade we've existed in hasn't even happened yet, or it's not being reported on. It's very difficult to find charts showing the Dow Gold ratio up till today. So I had to kind of look and figure it out myself. And then a lot of them show into the 2000s, but again, they end in about 08, 09. I guess that was the last time anyone really discussed it. But you can see some of these peaks here. Now this dates way back, ladies and gentlemen. You can see 1950 there is about 25% of the way, or a third of the way through this chart. The high there in September of 99, that big peak you see there, it was a 39 to 1. It was about 39 ounces of gold. I remember gold was devastated at this time. This was during the height of Brown's down, when gold was 250, 260, 256 an ounce. It was very cheap, and that the Dow was, again, performing very well with the dot-com era. Now, if you move on, you can see, well, if you look at the chart there, the little big waves, they take, decades to really rise and fall. But if you can flip them and take advantage of it, you can do very well. You can see there's times there where the Dow Gold ratio is below 2 ounces of gold to buy a share of the Dow. Now look back to January of 1980. We see a 1.29 Dow Gold ratio. So this is 1.29, about 1.25 ounces of gold to buy a share of the Dow. Not that bad. That's people talk about the 1-to-1 Dow Gold ratio, 1-to-1. Doesn't happen too often anymore. It hasn't happened for a long time, I don't think. We could see it in the future. You'd see some pretty extreme gold prices and maybe a devastating economic occurrence to the Dow. It's possible. Imagine a Dow 10,000, gold 10,000. There you go. You would then have a 1-to-1 ratio, or 15 and 15,000. I don't know. Again, these are hypotheticals. These are guesstimates according to some people. But it's an interesting topic of discussion nonetheless, because it is a measurement and a ratio that certain individuals take heed of and pay attention to, and even make investment decisions on. Again, not myself, however, others do, and I'll show you an example of that in just a moment. But look at that again. So if you'd taken 1.29 ounces of gold back in January of 1980, threw it down on the Dow, you could have ridden it back up and then sold in that last one we looked at in 1999. So about 19 years apart. If you had waited 19 years, according to this chart, you could have taken that 1.29 ounces of gold, flipped it, sold your share of the Dow in that last chart we just looked at, September of 99, and bought yourself 39 ounces of gold for every ounce of gold you had invested back in January of 1980. Does that make any sense? You guys following me here? What really puts it into perspective, imagine if you'd thrown down somewhat over 10 ounces of gold back in 1980. 11, 12, whatever, to get it to a 10-to-1 compared to this 1980 measurement instead of just the 1 ounce. You'd have ended up with over 390 ounces of gold in September of 99. Essentially close to 400. You're talking about a London good delivery bar worth of gold just based on throwing around 10 ounces down on the Dow at that time. So, for anyone who did that and played that game and was willing to wait out those decades, it paid off somewhat handsomely for them. Okay, some further information in discussing the Dow Gold ratio. On the 100-year historical chart, the two lows that are noted were the one we just looked at, January 1980, 1.29 ounces, and then there was a previous low also of 1.94 ounces in February of 1933. Now here we see another description of the gold to Dow ratio, and this is from, I believe it was goldprice.org, one of the gold sites. But the Dow Gold ratio is Bill Bonner's guide for when to get in and out of stocks. So when the ratio goes below 5, he buys equal shares in the Dow Jones Industrial Average Index. And when the ratio goes above 15, they sell the Dow and they buy gold. So where are we today? Again, we just looked at that, 18.64. So now that we're above that 15 mark, they would be selling the Dow and they would be buying gold. So if you're heavy in the Dow right now, which I doubt I have any listeners, members of this channel that are weighted 100% in the Dow, they would remove those positions and then allocate that wealth into gold and ride the ratio. So we'll see what happens. If anyone's selling the Dow today, I'm sure there's investors that are, and then wouldn't be a bad idea, especially when you're looking at an all-time high today, 29,000. And a lot of people think, oh, it could go higher. It could go either way. Remember back in 2007, just before the financial crisis hit, at that time, the Dow peaked. It hit its all-time high then. Now, I'm not saying every time the Dow hits an all-time high, we're going to face a major retreat and recession afterwards. I'm just saying that you can't look at an all-time high and take it as an indicator of greatness and prosperity, because many times what goes up must come down. And when you hit an all-time high on the stock market, there have been several times where it retreated from that point for years to come. And there is a look at the Dow Jones Industrial Average. This screenshot from CNBC. You can see the little bell above there. They even put new 52-week high today, and they highlight it. You can see that chart dating all the way back to February, just as it surpassed that 24,000 mark, and it rose throughout the year, fluctuating up and down, but ultimately reaching 29,000 this morning. Now, if you ask me, it's pretty easy to ascertain why this is happening. Look at these articles, look at the activity of the Federal Reserve right now. Now, I'm no genius, but a normal functioning economy should not require the Fed to be adding this amount of cash into the system. This is unheard of. It's unprecedented. The Fed added $83.1 billion in short-term money to the markets. The Federal Reserve mulling the possibility of a separate cash infusions they were looking at. Let's see here. This article here from Crypto Vibes was, since increasing its overnight repos dramatically in September last year, the Federal Reserve has constantly injected more cash and liquidity. We've seen that repeatedly. It's like that whole, we've seen the term quantitative easing, infinite QEI. That's what's happening. It's not quantitative easing 1 and then 2 and then 3. They used to act like they were doing it, oh, we'll just do it this one time and maybe a second time, maybe a third. It's perpetual at this point. The whole toxic asset relief program. Remember the bailout back when the economy went to poop, and you had Paulson up there, Hank Paulson, begging for money, and then they took the money and they bailed out everybody. It's happening every day now, every single day, diluting the currency, watering it down. The dollar it was worth nothing then, and now they're making it worth even less. I don't know how it's even possible, but it's despicable. It really is. I just don't see how people sit back and just take this constantly. It's absolute theft and thievery. And in the full definition of the word, this is the most thievery I think humans possibly can have ever endured, short of a king coming to your home and putting a sword in your mouth and taking your silver and gold right out of your pocket. So the repo market, it blew up. It had a problem there. Overnight lending, liquidity dried up. Banks were suffering. And, of course, the Fed stepped in towards the end of last year. In the articles, they're everywhere. Wall Street Journal, demand for Fed liquidity rises. New York Fed injects nearly $100 billion. This was just 2 days ago. We're seeing it repeatedly. And it's going to happen throughout this year, 2020. It's not going to stop now. And then you see this article here taken from the Wall Street Journal, where a top Fed official says that some repo operations might be needed at least through April. And you know what that means. They're not going to stop there. They always kick the can down the road, make people think it's going to stop at some point, because they can't just come out and say the economy is so effed, we are going to be forced to inject capital and fake money into it for the foreseeable future, for eternity. We are going to just make money up out of thin air and give it to the financial institutions. Because if they said that, I think a few people might clue in on it and be like, things aren't too good then. But as long as they can keep up this charade, this smoke and mirrors, and fake it till they make it, well then, the idiots out there, the people watching Dancing with the Stars and watching their network television and eating their microwave Hot Pockets, they they'll just eat it. They'll just consume and go about their daily lives in a zombie state, spending zombie currency on zombie goods. And, well, this bizarre world that we live in will just continue to be bizarre. What is this going to do for precious metals? We've talked about that repeatedly here for years. We just did a whole video on why gold is bullish going into 2020, and there really is no bearish outlook on gold whatsoever. There's just not. Yeah, you're going to see temporary retreats like we touched 1600 and fell back to 1555. If that gets you excited and you can't stomach that, you need to not even hold metal at all. Sell all your metal, just walk away. Go do something else. I don't know what it is. Go sell magazines. Go collect baseball cards. Gold's not for you if you can't handle $50 drops. It's just not your thing. And if you look at it in the short term, weekly movements, even monthly movements, walk away. You're talking about multi-decade, even lifetime invest. That's what gold is, something you buy for long term. Yeah, it's not a get-rich-quick scheme. You're not going to make $1 billion buying a couple ounces of gold here and there, ever. This is the real deal, ladies and gentlemen. This is the patient gaining wealth off of the impatient. Gold and silver will remain, I think, bullish. Not even I think. I shouldn't even say that. They'll remain bullish in this environment. I think silver is going to definitely follow gold, follow suit. I think it's undervalued when you look at what's going on, when we look at these facts. Now, like I said, I'm not a big Dow gold ratio guy. I like to look at it. I think it's fun. It's a neat, interesting topic of discussion. I don't hold anything in the Dow, and I doubt very many of you do. However, it is something to look at as far as determining the direction of where the Dow might turn and where gold might go, because I think it's going to narrow. I don't think we're going to sit at an 18.64 Dow gold ratio for long. I think it's going to dip below 15 again, and that means, one of two things. Either gold's going to skyrocket or Dow is going to crash, or a combination of the two, a rising gold price and a dropping Dow price. So we're going to see those events unfold at some point. And there's going to be a correction with the Dow, I think. Definitely. It has to, right? It has to. Yeah, definitely. I mean, look at what's going on. They are propping it up. They're pumping it up. It's literally pumped. It's a pump and dump scheme. People like to use that term quite a bit with other markets, and it's literally happening right in front of us by the biggest players in the game. The cabal, the Fed, the gangs of New York. Alrighty, my friends. Thanks for tuning in here to the Junius Maltby channel. Again, it's always fun to put these videos out, joining these discussions with you out there. Have a good rest of your day. I appreciate all of you who like these videos, who share them amongst friends and in blogs, Reddit, chat rooms, wherever you guys share them. I know they get shared around quite a bit. I appreciate that. And those of you who support the channel, my dear friends out there, DW, Enlightened Patriot, Paladin Stacker, you guys know who you are. Big friends of the channel, and those of you who help keep it going and motivated. Appreciate it. Have a good day.